All right. So on this session, I want to know, but first I want to know, um, uh, I'm glad that you've been studying and you've been very, 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 very active. Like it's at least it shows that you're doing something. You are doing something and you're trying to get better in what you're doing. You understand? It's very, very nice. Um, and I want to know the places that you have problems so that we can deal on that. You understand? And hello. Yeah. So I would like to know some of the I would like to know some of the places you have a problem. Okay, so that we can touch on that. Like since you said uh, well, can you just tell me first, like where you have problems, or if you prepare some questions for me, you can just tell me so that I will write them down. Okay, is it about um, the inducement that I talked about? Yes, 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 yes. Okay, okay. Which pair was that again? Yeah, yeah. Which currency pair was that? GBP USD. I don't know, but GBP USD. It's based on this inducement. Um, it usually fucks us up on inducement. You understand? So and I've even stopped trading GBP USD. But I don't even want to open that pair again because that pair it's not working on the inducement that I'm talking about. You understand? You know that there are certain pairs that works according to certain strategies. You understand? So yes, yeah. So it's because something like, I mean, not every strategy works on every pair, but supply and demand works. But yes, you understand. But like sometimes you might see that you could see that your strategy is more like you might see it on one particular pair. You understand, and you will just be smashing the market anyhow. You understand, but when you want to replicate it into some other pair, it might be working. You understand, for the most part, but you might not be seeing that constant profitability as if you were trading the other one that conforms with your own strategy, like with your strategy. You understand? So yeah, supply and demand works for me. Yeah, and it even works on GBP USD. But the inducement that I'm talking about, it does happen on GBP USD, but it doesn't fit my style again based on the inducement. You understand that I won. You understand? But traders, different traders see different things. But I'll open it, but I will explain um the like what we talked about on the group. You understand? So I will explain that. So which other question do you have? If you say other. Oh yes, oh yes, yeah. Okay, okay. Okay. That's cool. I'll touch on that too. I'll touch on that too. Um, yes, yes, yes. I do understand what you mean. Yeah. Okay. Okay. Oh, okay. That's like these questions are actually like the best questions. It's actually you just touched on like the questions that you're supposed to touch on. Like you touched on the best questions. Um, um, to me, I think well, first we are going to talk about the risks and reward first. Then we can talk about liquidity. Then we will now talk about Fibonacci. Um, okay, we're right. So let me just open the comment section. Okay, alright, okay, alright. So, um, risk to reward. Like the literal meaning, risk. You're risking to get the reward. You understand? So, like you said, you've traded or you've taken 16 trades, and 8 of it has gone to your favor, and the other one um, hasn't really been going. So let's say like more than 8 of your trade hasn't gone in your favor, and 8 trades has gone in your favor. Okay. I want to explain something. I will use the strategy that we use. Okay, I'll clear this up. Then I'll explain. I want to explain something to you. Okay, I think I'll just put this session on so that we know where we are. So this is my Asia session. This is the green shaded part is my London session, and this is my New York session. Okay. Do you know that, or you like? I want to tell you that you know that let me get something. Okay, like let me use this as an example. So the market was dropping something like this, and it broke structure. Okay, and this was on Wednesday. Let's say you wanted to take this supply, something like that. You wanted to take this supply, and it broke through, disrespected the supply. Okay, and disrespected this supply too. That's 2 supplies disrespected, and you've got this supply here that price used. Okay, it tapped the first one before it came back the second time. So, and what's based on our strategy, based on trading supply and demand, like the way that we do trade it, we are supposed to take the break of the signal candle, right? That's the first candle that entered the zone. Sometimes I might put like like this. Sometimes look at how sometimes I might place my zone here. Can you see what I'm doing? Like I can place my zone here at the like the whole of this green candle, or sometimes I can place it at the body of the candle. You understand? So I do this so that I will know the deepest pullback, because the market likes the deepest pullback. So if I am trying to take the deepest pullback, you understand? If I am trying to take the deep, because the market likes to pull back very deeply sometimes before. Not that it wouldn't go like this. It can, but it can also go like this. So since we are taking the break of the signal candle, like since we are taking the break of the signal candle, like the first candle that came to the zone, if we are taking the break of this signal candle, and this is our risk to reward stuff, and we might put our stop loss here or here. I'll still explain that. So I want to explain two different types of placing stop loss. So the first type of placing stop loss is you can place your stop loss at like 3 pips below or above the candle that entered your zone. Okay, you can place your stop loss with the measuring tool. You can measure it. You can place it like 3 pips above the last week that entered the zone. You understand? Or you can place your stop loss 3 pips from here, from this green candle, your green candle on your zone, 3 pips above. So you can place 3 pips above here, or 3 pips from this place. Do you understand what I mean? So yeah, so but if you are taking this, that means we are taking the break of the candle low. You understand? So this is low, so we are taking the break of this green candle low. You understand? But now if the market isn't going in our favor, that means the market will be doing the opposite thing. It will be breaking candle high. Do you understand what I mean? For example, we are taking the break of candle low. If the market is not going in our favor, that means it will start breaking candle high. You understand? And if it is breaking candle, if it's breaking candle high, it means that it is breaking the candlesticks, the high of the candlesticks. You understand? Which means it might not be going to our favor, or it means that the market is now making higher highs when it is supposed to be making lower lows or lower highs. You understand? So this is a perfect way for you to know that okay, this market is not going towards me, and if it breaks another high or a high towards my stop loss, I'm going to get out of the trade. Do you understand what I mean? Just the same way we are taking the break of the candle low, that is the same way we are getting off if the candle or if the market start breaking candle high. Do you understand what I mean? So if the market start coming up now and start breaking, are you getting me? Yes. So after the market has broken your candle low, that is broken through your signal candle, that's the first candle that came to the zone. If the market has broken like this, broken the low and starts coming down, you understand? Like broken the low and starts coming down, it has no other reason to start going up again. It's supposed to keep going down because supply and demand is a momentum type of strategy. Though sometimes it might come and play like on your to me, if the market is coming to my stop loss, that is when I add to my trades. You understand? That is when I add to my trade. But sometimes it does break through my zone. You understand? So I'm just, and also like that is one of the ways for you to know if the market is trying to, not basically, if it's not going towards your favor, I mean, to trying to work on your risk. You understand? So another thing I'll advise you, or I do most times. I think I've mentioned this before, is to journal your trades and know where you are, to know where you are making mistakes, or not just mistakes, but to know if, I mean, like, what you're doing. You understand? To know if you've, even if you're making losses, you're still improving. Like, to me, losses are like kind of the redemption in trading. You understand? So it is the redemption in trading. So to me, yeah, like, this risk to reward based on the 16 trades that you have taken. Did you like, sometimes, or when I make trades sometimes, when a couple of months ago, I don't know, but I've been doing this before, but I stopped it. I do, if I make a trade, I will take a screenshot of it and I will save it on my Telegram channel. So I downloaded a Telegram channel where I journal my trades. So if I make a mistake, I would know that, okay, this is the trade, this is the type of, because the market always repeats itself. Sometimes you might see a setup today, after 2 days or 3 days, in 3 days you might see the same type of trade. If you understand, it will be just as it is the previous day. You understand? So that if you start journaling, you would see that some of the trades that you're taking, the market would have, or you might have traded it before. You understand? So the first thing I explained about this one is for you to know when the trade is not working for you. If it is going up and now making higher highs after you are in the trade and going towards your stop losses with momentum. Hello? Yeah, and going towards your stop loss with momentum, I think you might consider maybe closing your trade and then looking for another entry. You understand? Because sometimes they would, like, trick traders to closing a very beautiful trade. Okay, so I'm still. I would actually like you to engage me with other questions on your trades. Like, if you've noticed something on the 16th on the trades on the 16 trades that you've taken, or if it's more than 16 trades, if you've noticed any pattern or any stuff like that in your trade, like how you think you're dealing with it, you understand, or something like that, you can tell me. Okay, so yeah, so you can check it. And secondly, like for me, I do a one-to-one risk to reward. You understand? But people, you can do more than risk to reward. But to me, I think I prefer one-to-one risk to reward until later. So I think I will risk it, because sometimes they just get on one-to-one and they will just reverse. Like, sometimes you will see that it just, like, the market just went one-to-one risk to reward and the trend will just change and then blast through your zone. You understand? So to me, I've seen proof that the market gives just one-to-one risk to reward. You understand? And sometimes it just gets like just one-to-one like this, or just one. You understand? So to me, I think that is what the market gives. So that's why I don't think I'll be stopping one-to-one anytime soon. Yes, 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 yes. And Yeah. And secondly, you know that sometimes you might lose one trade, yeah, and on your next trade, you're supposed to recover like part of the losses that you've made on the previous trade. Like I think one of the thing in trading is like growing consistently. But even if you're not growing consistently right now, just make sure that you're improving. You understand? Just make sure that you're improving, because sometimes you might make a loss today. You understand? And tomorrow you might like me, I do take 2 trades a day. You understand? I am taking 2 trades a day to make sure that I am trying to limit my losses. Even if I don't have a very large account, but at least to sort of manage my capital or manage my equity. You understand? So I set rules for myself that if I take 2 trades and I lose the two, then I am done for the day. If I lose one trade, I will try to take a second trade. You understand? So, and I will try to take a second trade, but on that my second trade, I will not risk more than the previous one that I've risked. You understand? But sometimes this is one part of what I do. But on sometimes, if I lose one trade, yeah, I would want to I will definitely take a second trade, and at that point, I might use the same risk, that I used on the first one. You understand? Let's say now I used one lot on the first trade and I lost it. On the second one, I would use one lot again. But sometimes if I use one lot on the first trade, on the second one I might use 0 point something, 0.5 or 0.9. You understand? But the reality of trading is that if you lose your next trade, you should be trying to recover part of the losses that you've made. But if you're putting it on your head that I want to recover my money, then you will lose more. You understand? If you want to hit it hard, then you go home very, very sad and broken. You understand? So that is just how, because the market, it pays you if you've come that, okay, you are Francis Ngannou, you want to come and punch it, man, you are going to receive it all. You understand? So that is just it. So to me, and it is always very, very heartbroken that, okay, and and you might lose on the second trade. So you might even lose on the second trade, and you'll be like, man, you've just, then you just give it up for that day. You understand? Even when you try, when you see the next beautiful trade, bro, just leave it. Just be like, I'm done for the day. I've lost 2 trades. But like, to me now, sometimes I lose 2 trades, yeah, but I lose more than 2 positions or 3 positions, because when I open a trade, I sometimes if the market is like maybe like sort of going my way, or I know that I am very kind of confident on my setup, and the market is going towards my favor and then pushes up. You understand? Let's say the market is going towards my favor and then pushes up, and this is where I have my stop loss. If the market is getting towards this place, I usually add more positions here. I usually add more positions when it is reaching my take profit, my stop loss. You understand? I might add 1 or 2 other positions around here. You understand? Because what shall it profit me? Because if I lose, it's just close to my zone. You understand? I mean, if I lose, it's just close to my stop loss. But if I win, I am getting all these. You understand? So that is it for me. If the market is like getting very closer to my stop loss, but I don't think it makes sense, because sometimes they will basically they will not touch your stop loss, and they will just go to your favor. You understand? So it is you can't do anything about it. It's what they do. You understand? So I think that the perfect way to make sure that you're consistently growing on your trading, in your demo trading, is, one, I told you that you have to treat your demo as if it's your real account. Like even if you're trading demo, that's why if I want to open a demo account, I usually go for the lowest amount. I don't go for 100k accounts. I don't go for 50k account. If they have a 3,000, if they have a 3k this thing, if they have a 3k account for a demo trade, I can do that, because if you can't grow a small account, you can't grow a big account. That's just it. Like if you can't grow a small account, you can't grow there. You've got nothing to do with a large account. You understand? So you just have to journal your trades on your demo account and make sure that you're treating it like your real account. Make sure that you're treating your demo account like as if it's your real account. If you have a particular time you're waking up to trade, just make sure that, or a particular time that you're trading, just make sure that you're sticking to that same time. If you have a particular strategy that you're using to trade on your demo, just make sure that you're sticking to that same strategy. You understand? If you have a session, a forex session that you're trading, just make sure that you're sticking to that session, because it's all these things that develops your mindset and your psychology for trading. Because if you learn the bad way, bro, you're going to stay the bad way. And if you grow in trading and you learn the bad thing, or if you learn a wrong thing, that wrong thing is always going to be with you until you correct it, and it wouldn't be very easy to correct. Like it's just as if you're teaching a small kid how to, how to do something at a very young age, or something wrong at a very young age. You understand? So if you really want to keep building on your psychology and your reach to the world, just keep doing everything right. Try to learn how to cut your losses early. If the market is not going towards you, just know that it's not going towards you. Because I was reading a book on supply and demand, and the trader, a very nice supply and demand trader. So there was this thing that he said. He said that if price action tells me to get out, I must get out. If price action tells me to get out, I must get out. Because if it is not working my way, and if it's not going my way, then it's not going my way. If the price is not going towards me, my favor, then it's not going towards my favor. You understand? So that is about it. So that is about it on Risk to the World. Journal your trades. Make sure that you're sticking to your strategy. Don't mix things on your strategy. Make sure you're sticking to one style of strategy. Don't overthink your setup. If you start overthinking your setup, if you start overthinking your supply or your demand setup or your support or resistance setup, bro, it's not correct. If you start trying to force it that, okay, this is not your support, but you want to fix support inside of it, you're trying to fix support inside it, or this is not a demand and you're trying to force demand inside of it, then you're very wrong. So by trying to know when to cut your losses, and journaling your trades, checking your lot sizes. You can maintain just one particular lot or size, trading until, if you feel like you're developing, then you can increase your lots, because on your next trade, if you take a loss on your next trade, you're supposed to make back the money that you lost. But don't give the pressure to yourself that you just have to, that you must recover this fund. Just keep taking it gradually, like step by step. Don't try to force yourself to recover, part of the funds that you've lost. But if you see a beautiful setup, if you see a very beautiful setup, you can load your lots. If you see a very beautiful trade, you can load your lots. So that's what I do. If I see a very beautiful setup, I do load the lot. I mean, load the lot is that you might now increase your lot. You understand? But if not, you just keep on with the lot size that you're using. Okay. Yeah, 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 yeah. Support and resistance is very important in, because sometimes we do overlook support and resistance. But me, I don't overlook support and resistance. Again, I pay very close attention to support and resistance, because there are traders that are trading support and resistance, and sometimes if you go to let me get a trade that went for today. I think I'm trying to find something. I'm trying to find a support type of trade. I want to give a quick explanation for what you asked. Yeah. For example, here, if you look at this place, you'll see that you saw a level, like the market bounced here, came, bounced here, came, bounced here, then came, bounced here. You understand? So even if you had two bounces, automatically you're going to call here a real-time support and resistance. This is a support already. You understand? So there are different types of support and resistance. You have real-time support and resistance, and and previous type of support and resistance. So real-time support and resistance are support and resistance that the market are making while we are trading. Okay, like is the type of support and resistance that the market creates as we are on our trading session. Okay, so it is creating a real-time support and resistance. So like for example here now, the if you go to 5 minutes, you will see that the candle closes below. You understand? So to me, yeah, if the market is, if I have a support zone or a support level, and on my higher time frame, I don't have a close of the level. I don't have a close that is breaking the level. And on the lower time frame, I have a close. You understand? I still take the support level or the resistance levels very valid, because higher time frame are stronger than lower time frames. So since we are not getting any close here on 15 minutes, that means this support is strong. You understand? Because it is 15 minutes, but you can see on 5 minutes that it's closed here. You understand? It's closed below, but on 15 minutes it's still very much valid, because the candle are not closing below. None of the candles closed below. It just bounced 1, 2, 3, 4. You understand? So it is a strong level. So I am trying to answer the question that you asked. Am I getting it? Yes. Yes. then go up or down. Okay, so it comes to something like this now, and then go up further. Yeah. Yes. Okay. Yeah. I do understand what you mean. I want to tell you that, yeah. Okay, now, like let's say they created another demand here. Let's say they created another demand here, right? So this one, let's say they now created another demand here, right? Then you'll be thinking about which demand am I going to use now, Okay, which one will you use? Yeah. I understand what you mean. But first, you know that the market will not always respect your demand. The market will not always respect your supply. The market will not always respect your support and resistance. So in this instance now, you know that this was your resistance, and this was your support. So whenever the market breaks a resistance, it automatically turns into a support. Okay, so so if the market like went up here and then broke this resistance, okay, and created a demand here, you understand? For sure, if it comes back here, automatically this resistance is now a support. You understand? Because it broke the resistance, turning the resistance into a support. So if the market comes back again here, if the market comes back again, yeah, let's say the market comes back again, like this, definitely you are taking this setup. Definitely you're buying. Yes. So you don't have to think about the one below here. If it's just above the support, still maintaining the support, because now it's a support, it's not a resistance anymore. Okay, so if it broke your support, close completely above the support, broke through this resistance, turning this resistance into a support, broke it and closed completely above it, and also breaking structure by the left hand side, like breaking structure. You understand? So yeah, for sure you have to take this setup because it is going up. You understand? Don't. No. It mustn't come down to the second one. It mustn't come down to the second one. Though there is a gap here that needs to get filled. You understand? There is a gap here that needs to get filled, but the support, definitely people are going to hold it. You understand? There are traders here, and sometimes it can also it can even form a inverted head and shoulder. You know, like sometimes if your demand is broken, they might use your demand as an inverted head and shoulder to sell. You know, or sometimes if your supply is broken, they might, you know, like turn it into an inverted head and shoulder and then buy. You understand? So these are reversals. You know, just make sure that you're washing the type of candlesticks that you're getting. You understand? Wash the shape of the candlesticks that you're getting. But definitely, if you've got this type of setup and a demand that is here, you know, just take the trade. It's going to hold. Okay. Yeah. You know. Okay. Okay. The liquidity. Okay. Let's go to liquidity. Okay. Okay. Let's find a trade on liquidity, and let me put this on so that we would know which session that. Which pair is that? SPX 500. Okay. It's SPX 500. Yeah. Supply and demand works very well on indices. Like it works perfectly on indices. But you can trade it. What I've been like SPX 500 is one of my favorite pair on indices. I still trade SPX 500. But I trade it on 15-minute chart because that's where I see setups. You know, so I trade it. Yeah. So I trade it on 15 minutes stop because. Yeah. So. Yeah. It's not always that very nice like that. It's not always that nice like that. Yeah, but I like SPX 500. I just trade it on 15 minutes chart. I'm trying to get I'm trying to get something. There are certain candlesticks that traders are supposed to know. Okay. Let me okay. So when it comes to liquidity, when it comes to the liquidity and the inducement I talked about, it is I don't know if I think I talked about that. No, I don't think I've talked about that. It is called like a drop-based drop or a drop-based rally, sort of. You know, have I talked about it? Okay, so that is how it works. Like, I am trying to get a perfect example about that, and sometimes, do you know one of the? I want you to, like, go back to your charts and learn about this candlestick. I want you to study about this candlestick. Yeah. I really want you to study. Pardon? Where? Oh, yeah. It's a very important candlestick. It is a very important candlestick. This type of candle. they are very, very, very crucial. They are very, 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 very crucial candlesticks. Like you just have to know them. So this is a doji 50-50 indecision. These are do you know that sometimes why these candles, I'm trying to explain liquidity to you, why these candles have this type of long width is because they are trying to take the stop losses. People that bought, that had their stop losses around here, they are trying to, if people have their stop losses here, that means they bought here. That means they bought here and their stop losses are here, and they are targeting any place above here. So if you're having this type of candle, if you're having this type of candlesticks that is going deeper than the previous ones, that means it simply wants to take out liquidity from this place. By liquidity, I mean stop losses. That means if someone is buying here, that means stop losses are here. I mean by traders that are swing trading, that are holding trades for days, and traders that are even trading real time. If you see candlesticks like this, it simply means that candlesticks like this going deeper than the other candlesticks. It simply means that they are grabbing liquidity. They are grabbing the stop losses. And just like a thief, whenever a thief has the money, then it is gone. And whenever they take these, grab this liquidity, they are usually gone. Whenever they grab this liquidity, you will see a very big explosive move like this. They'll be gone. You understand? So this is just a liquidity grab. So there is liquidity here. Do you understand what I mean? So that is what I mean by, for example, now you see this candle. Like let's say this okay, let's say the market is making highs, the market is making higher highs, something like that. And if you mark something like this, you see that the market is just bouncing on the bouncing like this and making highs. So I just drew this by if you want to draw a trend line, for you to have a valid trend line, the market you must have up to 3 bounces. You must have at least 3 bounces for you to have a valid a valid trend line. So let's say like this, that the market has been trending up, so this is 1 bounce, 2 bounce, 3 bounce, so it is valid. So, and if it is not closing below, then that means the line, or this is a support really. It's just bouncing up and going up, bouncing up. You understand? So if candlesticks are not closing below here, below this trend line, that means it is still valid. That means this trend line or support is valid. If it were up, it would be a resistance. So since we've known that the market is trending up like this, and and it's breaking structure to the upside, and you've got something like this candle, this type of candle, it went below here to grab some stop losses here. It went all the way down here to grab this stop loss. So if you have something like a trend line, and the market is wicking deep inside of it and pulling up, it's just grabbing the stop losses that are lying below and above the lines. It is just grabbing the stop losses that are here. You understand? If they are coming out like this, they're just grabbing liquidity. You understand? So that is the main reason why it is coming like this. So you have something that went all the way down here. It's just going all the way down here to grab. If you have a straight line here, maybe if you can draw it from the close. You can draw it from the close. Like you can draw it from the close or from the wick. You understand? You can draw it from the close or from the wick. You know. So if they pulled all the way down here, that means they want to grab this liquidity and then zoom off. Do you understand? That means this setup is going with liquidity. Do you understand what I mean? Like this demand setup is going with liquidity because the candle, because the supply, or I mean the demand has money with it. It went deeper, you know, broke the red candles, you know, grabbed the liquidity that are sitting below it, and then gave you a demand setup, you know. So whenever you have those type of setup, the market usually you can see that when the market pulled back down, it shot up like this, you know, because this demand has liquidity with it, because this move that created a demand has liquidity with it. I mean, like, because there is liquidity here, this came and then tapped into it. You know, do you understand what I mean? Yeah. Let me look for another example. So that's what I mean by trading, taking trades with liquidity. Let me get another setup that explains what I mean. But if you've got another question, you can ask me. Okay, let's see now, for example. Yeah, you just want to do okay, now let's see. Now the market is going up, okay, and then it dropped like this move downwards. The market is supposed to be going up. This move downwards just cleared liquidity that are sitting below here. The more upside, okay, if it is going up, it is creating liquidity below it. So when it wants to go up more, it wants to grab those liquidity it had below to continue going up. You understand? So if it is going up like this and it has been creating liquidity below these red and green candlesticks, you understand? And it wants to go up more because it has been breaking structures. You understand? It wants to go up more because it's been breaking structures to the upside. So for the market to continue going up like this, it wants to come back here, grab this liquidity here, you know, take all the liquidity here, you know, and then shoot up and then create a demand just immediately after grabbing the liquidity with that candle. Just mark the candle that grabbed the liquidity. It just came back in and then zoomed off. So it had the money here. You can see how it shot up. So it had the money here because this candle here is the candle that grabbed this liquidity and then gave you a demand. Do you understand what I mean? So each time if you want to draw your demand setups, or if you want to have your demand, look at the other side. You know, check if the candle pulled back down. Check the shape of the candle. Check if you're getting this type of candles on your demand. You know, this type of candles, the liquidity grab type of candles that are going down, way down below the candles by the left. like they are going way down below the candles at the left, trying to grab the stop losses, you know. So it just went down here to grab this stop loss, all this one, So it is drop base rally. It is drop base. This is the base. Then a rally. You understand? So the base is just coming to take out liquidity. So if got the drop, this is the drop. That's the red, the drop, and this is the base. This is the base where it stopped. I mean, like where it took out the liquidity itself. You understand? So this is the base, and this is the rally. This is the rally. Let me get this. I'll make this morning. So I'm gonna take this out. So this is the drop. Are you getting me? So this is the drop. This is the base. This is the rally. So that is a valid. This is the drop and the base. I mean the base. It's coming back to the base just to grab the liquidity below here. You understand? So when you mark your demand, look just way below. Check if it's taking the liquidity that is sitting below the opposite side. You understand? If it's going below the candles that are sitting below the opposite side, just it is grabbing liquidity. And whenever it comes again, it's going to, if it comes back to the zone, it's taking off. Do you understand what I mean? Yeah. So this is what I mean by liquidity. Okay. Yeah, like setups that have liquidity. Yes. If you don't do what? You say if you don't do what? Oh, yes. If you're not straight in collecting your profits, you wouldn't know where the next this thing will be. The next liquidity place will be. But sometimes if you want to put your stop loss, I mean your take profit, it should be, that these things, I mean, like there is what is called compression in the market. So like compression is movements like this, like this dirty type of movements are called compression. So whenever you see this type of compression, there are usually liquidity that are sitting below and above it. Like this type of things are compression. So if you're selling or if you're buying and you've got something like this above your zone or above your support or resistance, you can see how they dropped like this to take out all the liquidity that are sitting below here as the market is going up. I mean, like as the market is going up, it dropped like this to take out these stop losses. So if you're buying, and you've got this type of compression, this type of compression here, just make sure, just target that play because it is liquidity sitting there. Like it is liquidity sitting above that place. Yeah, it's a whole lot. It's a whole lot. I want to So I want you to always look at the, so if the market is reaching to your zones, yeah, or your supply or demand zones, start looking at um, the shape of the candlesticks that you're getting. Okay, start looking at the shape of the candlesticks that the market is giving you. All right. So I want to check if I can get that type of liquidity explanation for sell. I want to check if I can get that type of explanation for sell. Where can we see sell? Where can we see so but the sell setup is basically same thing. Like it's just like they wanted to sell, then they go up, and then they took the stop losses of the first people that were trying to sell. Do you understand? Like the one you thought they wanted to sell, they might have consecutive red candles, which means they wanted to sell, and they pull up with green candle, and then took the stop losses of the ones that sold first and then dropped. Do you understand what I mean? Hello, are you there? Okay. I don't know if you heard what I said, but I'll try to get another example. Look at this place now. This candle opened here, it came down here just to grab the liquidity that are sitting up below here, and then shot up. You understand? So you have to be looking at the candlestick. This is a doji. This is the type of candlestick that I said on the previous chart. So just read meaning into your price action. So just read meaning into it. This candle opened here, went all the way down here to grab liquidity, and then shut up. So it is you have to read meaning into your setup. Okay, now look at this. Now this is a good example. So they were dropping, right? They were dropping. You've seen that the market is breaking structure to the downside. The market is breaking structure to the downside. It is breaking structure to the downside, right? And they wanted to drop. Okay, it wanted to drop, then it shot up like this. So remember that if you've got this was way before it came up, so that let's say at that instance we had this, so it wanted to drop first. So since it wanted to drop, there were people that were already selling. That there are people that are already selling at this drop because they know that the market is breaking structure to the downside. So some people were already selling, So I mean, like some people were already in the market, you understand? So selling this, So now the market came back up like this to take them out, which means that's wickedness, bro. So which means it took this money here. That's wickedness. You understand? Which means, see, I want you to take something into consideration. I want you to always put this into your mind. I want you to always, before you take a trade, ask yourself, have people lost so that they will lose before you trade? Ask yourself, you want people to lose first before you trade. And that losing means manipulation. Just to wait for people to lose Do you understand what I mean? Like, wait for that manipulation to happen. Do you understand? So wait for them to grab that liquidity. You understand? So it just grabbed it and it was still going up. Like for people that still had their stop loss above here, you know, like this candle was still going up to grab all of them, you know. So now it grabbed them before it now dropped, and now you lost before it went to your favor. Now this supply now is a very high probability supply. Remember, you've lost here. Now this supply is a very high probability supply, because when next the market comes to the zone, it's going to drop because they've got money there. And you see, it dropped first one. You understand? So it has money in there, and whenever the market comes again, you know, it's going to drop massively. You understand? So you see, like this was when it came back again, but during this side, the market is already closed, you know, so there were less volume here. You understand? Because it's past New York session. You understand? So this is just make sure that before you trade, just wait for the manipulation to occur first, so you know that, okay, yes, this is your setup, like this is your perfect setup, and whenever the market comes back, it's supposed to be dropping. Don't just take a support or resistance setup, or a supply or demand type of setup. Like if I want to take a support and resistance setup, you have to wait for people to lose first. If you had a support here, and you wanted to trade support, and maybe you've got something like this as a support, you know, just wait for them to do this liquidity grab, to make this move here, then you can buy, you know, because they've got the money here, you know, they've taken everything here, you know, and they are going, you know. So if I want to take support and resistance type of setup, I wait for them to make the bad boy move before I get in, you know. So that is what I mean by liquidity, making sure that you're trading with liquidity. Okay, so each time before you trade, make sure that if the market made this type of drop, base drop, like it dropped, it made a base, then it dropped. You understand? So on the first, just make sure that your setup has these three components, or the first component. You understand? Like it must have a drop, then it must have a base, then another drop. You understand? So these are the type of, then you know that yes, this is it has liquidity inside of it. Okay. Yes. So, and if you're trying to trade, if you're trying to add, have you got any questions here? Okay. So let's come to Fibonacci. So if you're trying to add Fibonacci to your trade, you know that Fibonacci works with market structure. You've got to know where the move, you've got to know where the origin of the move that broke structure came from. Like for example, this, for example, I wanted to, let me take this off. So this is a break of structure, and the move, if you're selling, look for the green candle that generated the move that broke structure. Do you understand what I mean? Like, let's say we want to sell, and we saw the green candle that broke structure. And make sure that if you're trying to add both candlesticks and structures on your chart, or you want to do something, just make sure that like if you want to take a supply setup or a resistance setup, make sure that the candle in question, if it's breaking structures, make sure that the length of the candle, is up to at least more than 10 pips. Like, yes, not just you're taking setup just because you're taking a setup. Make sure that it is more than 10 pips and above. Don't just be like you're taking, or maybe like the candle make this type of small move and you're trying to sell, something like that. Make sure that your candle are kind of long. Don't just take don't just take something like this, like a supply. This type of candle is not even up to strength 10 pips like that. You understand? Just take a very nice, beautiful candle. You're doing institutional trading. And even if you're not doing institutional trading, you're trading support and resistance. Just make sure that if you're trying to, because it is these big moves, it is the body that the market pays attention to. The market doesn't pay attention to wicks. It doesn't pay attention to wicks and candlesticks. The wicks and candlesticks are just used to grab liquidity. They are just used to grab stop losses. You understand? Like this type of wick now, this week happened here because they wanted to take this compression. They wanted to take this, yes, just to take everybody out, before they drop. This one here, they just came down here because they wanted to take the stop losses that are here before they go up. You understand? So wicks are just to grab liquidity, but the body of the candle, the body of the candle is what the market pays attention to. You understand? So when you're dealing with the body, make sure that the body of a candle is very tall and beautiful, and it is breaking structure. So when you see that kind of explosive type of move that is breaking structure, you understand? Look for the green, for a sell. Look for where the move, look for the origin of the move. You understand? Look for the origin that generated the move that broke structure. So this is the origin that made this move that broke structure. You understand? So if you want to place your Fibonacci, you take it from that green, like from that green to the candle where it broke, the last part of the candle. Do you understand what I mean? Like, let me. Are you there? Hello? Okay. So you want to take you want to put the Fibonacci. So you're putting it from the green candle that generated the move that broke structure up to the last part of the candle, up to the wick. You understand? So, and you're taking, yes, you can take the 70, I use 70 percent retracement. So like this is my stop, this is my 70 and this is 62. So this is the setup I use for this thing. So sometimes I might remove this one and this one, and sometimes I have them on, but this is just my setup for fibs. Okay, so you can wait for a 50% or a 60% pullback. You understand? So that is how you draw your Fibonacci. Then you might want to know where you could see what happened when it came up to 70%, the golden zone, it came down. You understand? So you might take like based on where you want, you might take any level, to do you mean by the levels? Oh, no. Fibonacci, no. It works on all time frames. Yes, it works on all time frames. So you can add Fibonacci to your style of trading. I mean, to your support and resistance or your supply and demand. But just make sure that you're drawing your fib, like from where the move started to until it broke structure to where the candlestick ended. You understand? So yeah. So but if the market is going up, if it is going up and breaking structure to the upside, if you want to draw it, you're drawing from you're drawing from right to left. You're drawing like this. You understand? And you're waiting for a pullback. Yes, but if you're selling, you're drawing from left to right. You understand? You're drawing from left to right to where it's ended. Okay, so if the market is going up, you're drawing from right, from where the move started up to the place where you broke structure, and you're waiting for either a 50% or I use this level 62 and 70 because they are more stronger for me. I don't use 50% if I want to trade Fibonacci. I wait for more than 50% retracement because the market likes very deep retracement. So I just added this 50%. But if I want to trade Fibonacci, I use this 62% or 70%. So if you're buying, you're drawing your fib from right to left. If you're selling, you're drawing from left to right. Understand? So this is how you draw your Fibonacci. Okay, let's say something like this. That this move started here and broke this structure. So let's say the move started here, right? Let's say it is going up and we are drawing from left to right. So that means we are drawing our Fibonacci from this red candle, right? Because it is going up and we are drawing from right to left. So, well, we are drawing from right to left. Okay, so this is how we're going to draw it from this red candle before this explosive move, from the red candle like this to where the move ended. So we'll be waiting for a move back at this either of this level, so that if you're buying or if you're selling. So you see, though it broke. You understand? So I don't. Basically, not all levels are going to be respected. So if you're adding Fibonacci to your style of trading. Okay, let's say that you had a demand here. Definitely they broke it. Do you understand? Yeah. So if you want to, don't trade. If you're trading, don't trade only Fibonacci. Still add it. Add other things to it. It is an indicator. It is. There are different types of indicators. There are leading indicators and there are lagging indicators. So Fibonacci is a leading indicator. So you add it to. I think it's either a leading or a lagging indicator. I think it's a leading type of indicator. I've forgotten, but you have to add it with your strategy. You understand? So that it can conform and like you can make the best out of it. Don't just use it to trade like that. You understand? Yeah. So have you got another questions? Oh, okay. All right. All right. No problem.